Stock Karen. Stock Karen, please report to the studio.
Hello, guys. It's Stock Karen, and I want to speak with your manager because I have a complaint.
And the complaint is SoFi stock is back in the toilet. Hey guys, it's not Stock Karen, it's your friend, it's your boy, it's your local SoFi guy. It's DannyDealz. I would like to welcome you to Un Poco Mas, the show where we give you just a little bit more on behalf of executive producer Hurricane Lopez. Hello and welcome. Welcome and hello and welcome. Thank you for joining us. It is Sunday, May 14th. It is Mother's Day today. Happy birthday to all the mothers out there. If you have to live with an investor with a bonehead who buys these horrible stocks that do nothing but go down under short attack despite good earnings reports. Oh, God bless you. You probably listen to us rant and rave all the time. The mothers, the wives, the girlfriends, the grandmothers, all you beautiful, wonderful women out there, happy Mother's Day. Let's get into the SoFi stock. Ticker symbol is SOFI. On Friday, we were down about 12 cents and down a few more pennies after hours. Been sticking right around that $5 mark. Significantly more call options were killed on Friday, of course. Let's take a look at the browser here. There's a lot to talk about when it comes to SoFi. One of the first things to get out of the way is Noto bought more stock a couple days ago. I don't have the filing in front of me, but I think he bought another $250,000 or so worth of stock. Noto buys all the dips, which is pretty encouraging. People keep saying that insiders are dumping. Insiders are dumping. That's one of the common refrains of the bulls or the bears. I'm sorry. It's not actually true. Yes, insiders have sold some stock, but I wouldn't describe it as a fire sale or anything. Most of the insiders retain large positions in the company. There's a strong insider ownership of the company, 6% of the shares, over 6%, which is very strong. 40% of the float is currently held by institutions. At least that's how it broke down on Yahoo Finance. There's probably more current data out there, but in any case, there's some advice I'd like to give to retail investors who invest in SoFi. Stop buying weekly options. It's stupid. If you're going to do options, which you probably don't know how to do because you're just a fool and you watch like, Meet Henry or Felix or what those guys are smart. I'm not saying they're not and their strategies work, but you're probably not going to be able to execute them because you're a big idiot. So stop buying options. Buy long shares. Just don't buy leaps. Again, buy long shares. Options are very easy to manipulate. Market makers can see exactly what options are out there, exactly what the open interest is, and they're more easy to manipulate than you think. Even leaps, buy long shares, lock your shares. Don't take the pittance that your lame discount or free broker will give you to lend your shares out to short sellers. They'll probably give you like 10% of the money. It's not worth it. Lock your shares down. You don't have to put a sell order at, $3,000 a share. Just tell your broker you want to lock your shares. You don't want your shares lent. If you tell your broker that, they can't lend your shares. Um, and then, of course, the most important one, stop panic selling. Stop dumping when market makers want you to dump. That's the reason these short attacks work. That's the reason they make money. They get you to buy at 6 and they get you to panic sell at 475, and you just lost a ton of your money, 20% in a matter of a couple days, and they just gained that money. And that's the way it works. They manipulate your emotions. Just stop letting them do it. Stop setting stop losses. This is a very volatile stock. If you've been invested for a while and you can't see that, you're just a fool and you shouldn't be investing. You know, I hate to see retail just continually robbed on this stock, on this endless short. Like, all you should be doing is just what Noto is doing, is accumulating shares when their prices get very low. Take what the market gives you. Don't fight these shorts. Take what they give you and make them pay. When they drive the stock very low, like say down into the mid fours, the smart thing is not to dump down there at a big loss. The smart thing would be to buy down there, unless you believe that SoFi is going to, break lower and could go to zero and is going to go bankrupt. I don't see that. I see SoFi as greatly on sale. To that end, now that we've talked about what retail should and shouldn't do, let's go over to this article on May 12th, Friday. SoFi stock gains a bull. Analyst calls it the future of U.S. banking. This article links over to Barron's, and I unfortunately do not have a Barron's subscription. I have premium. Oh God, TipRanks, Fintel, Ortex. I have so many subscriptions, guys. I can't buy every single subscription. I'd love to. I try to bring you the best information that I can, but God knows I'm spending several $1,000s per year just on subscription services to analyze stocks and different things like that. So I don't have a Barron's, unfortunately, but if you do, go ahead and check out the article. But you don't really have to because you could just check out this video. Regional banking crisis is attracting deposits for digital service, says Truist Andrew Jeffrey. And that's the analyst who just came on board and picked up coverage with SoFi. Andrew Jeffrey, manager of fintech software research at Truist, joins the exchange to discuss the future of banking, the shift toward digital banking, and how SoFi is attracting deposits with a high yield savings account and the case for fintech services. This is on CNBC's YouTube channel. I highly advise you to watch this video. Andrew Jeffrey is one of the best analysts out there. Guys, I want to give you a tale of two analysts. One would be Andrew Jeffrey from Truist, who just picked up coverage of SoFi and set a buy rating and a price target of $8 and called SoFi the future of banking. And the other is David Chiavarini, who is the Wedbush gentleman hack, if you will, in my opinion, who just downgraded SoFi from a buy to a hold, and he cut his target from $8 to $5, which I don't know seems very very severe. Uh, Considering the ER was actually quite good. But just let's call this a tale of two analysts, okay? Here's Andrew Jeffrey from Truist, who just put a buy rating and an $8. He's ranked number 181 out of almost 8,400 Wall Street analysts. So that's like the top 3%. He's ranked 509 out of 33,000 experts. His success rate is 64%, and his average return is plus 12%. Now, if we look at David Chiavarini um, with Wedbush, who just downgraded SoFi, you see right here, $5, 37% downside. He's had a 0% success rating with the SoFi stock, but he is ranked number 7,942 out of 8,400 analysts. So I don't know what that is, like the bottom 5%. And he's ranked number 29,745 out of 33,000 experts. So if you look at how TipRanks does this, and I love TipRanks. I subscribe to TipRanks. They don't pay me anything, but this site is awesome, and I really would not want to invest without TipRanks. Again, I'm not endorsing them. They don't pay me a dime. I pay full price for their product, and frankly, I would pay twice the price because it is extremely useful. You might not put a lot of stock in analysts and what they say, but they move the market, and it's very important to know when a upgrade or downgrade or a rating comes out who's actually talking. People go, oh, they got an analyst rating cut to 5. Oh, another analyst came out and put a buy at 8. Who are those two analysts? The tale of two analysts. David Chiavarini is not fit to carry Andrew Jeffrey's jockstrap, in my opinion. The guy is a complete hack. These are not arbitrarily, these ratings are not just made up. This is back tested from actual data. From when he puts out price targets and buy and sell ratings, they actually just look at what the stock does. And this guy is an absolute turd. Now, do I have evidence? Can I prove that he did this cut in coordination with the short attack on SoFi? It seems very, very obvious that's what happened. Just anybody with logic and two eyes who looks at the fact that this guy's reputation is absolute garbage and he is an analyst is garbage Does it look that way? Does it look extremely suspicious? Yes, it looks extremely suspicious. Can I prove actual coordination, any criminal activity? I can't prove it, of course. I don't have his communications. I don't know who he's telling about this call in advance. I don't know who's paying him to make this call. I don't have any evidence of anything. But in my opinion, this call, this downgrade, the timing of it, the severity of it, given the fact that the ER was actually pretty good. Pardon me, folks, a little bit parched there. Welcome, and Toper time check. Toper time check is 6:11 p.m. on 5/14/2023. That's 6:11 p.m., 11 minutes past the hour. That's 19 minutes to the bottom of the hour, 49 minutes to the top of the hour. That's a Toper time check, 6:11 p.m. Pacific Standard Time. So David Chiavarini, again, success rate 39%, average return -6%. One of the worst analysts in the country downgrading the SoFi stock. And Andrew Jeffrey, one of the best analysts in the country. And if you see this guy on TV, watch this video, watch some of David's videos, some of Andrew's videos, you'll see one is a complete useless turd, in my opinion, my opinion, and one is an actual thoughtful, really good analyst who understands the issues and who really understands the future. So please watch this video with Andrew Jeffrey. This was just 2 days ago on CNBC's YouTube. I will not put a link to it down in the description because you can find it yourself, and I'm not going to make things too easy for you. And I don't care if you watch it, it'll benefit you and will do nothing for me. So I'm not going to link to it because I just don't care. But in any case, I suggest you watch it. This is what you have to be careful when looking at analysts. Some of them are hacks, some of them are working with short sellers, in my opinion. And some of them are actually doing their job and trying to put out accurate, timely information that reflects the reality at hand. So let's just take a look at this article from Investor Place. Buckle up, SoFi stock could be heading for the moon. I hate these to the moon articles. They're sort of done to death, but what are you going to do? This guy, David Modell, I've read some of his pieces. I don't know too much about him. By now, let's look at the criticisms from the ER. Basically, that you know, SoFi had the tech side had lost a couple of customers. Now the CEO came out and said, "Look, with Galileo, we're trying to add bigger accounts that take longer. They're a little bit more difficult to onboard, but ultimately for the company, it's going to be better than the smaller accounts." Time will tell if that was just a BS excuse for losing customers or if that was the truth. But we're going to have to give it a few quarters and actually see how that shakes out. As far as the other thing that was the major criticism that SoFi was receiving from the earnings report was that they were not selling off their personal loans during the first quarter, that they were leaving them on their own books, holding the loans themselves. Um, a lot of the bears have used that as a reason to attack the stock, to attack the company, to attack Nodo, to attack the strategy, and I just don't see it because the loans have not gone bad. I think to kill the stock and to sell off the stock and to short the stock in a real world scenario, not this BS scenario where you're going to short SoFi no matter what the earnings are, no matter what the numbers are, which was the case here and with the in concert, in my opinion, with the downgrade and all the entire financial media just crapping all over SoFi and the ER for no reason. Of course, they flipped a couple days later when they wanted to pump the stock again. But the financial media, the analysts, they all want market makers to make money, and they all want to kill retail. That's where the money is, and that's what they do. So you have to understand that, and you have to go your own way and not dump at the bottom because that's how they make money off you. And you know, that action really feeds the market makers and really screws the retail investor. So, have the personal loans gone bad? Have there been a lot of defaults? No, there haven't. SoFi is, in fact, that's not reflected in the ER. I invite you to read it yourself. I did. SoFi stock and the company should be punished when those loans start to go bad in mass. And I would contend they're not going to because SoFi's borrowers have great credit and great jobs. They have high incomes, they have extremely high credit scores, and These are not the people that are just going to destroy their credit over a personal loan. And people are like, well, the personal loan is the most risky because number one, people pay their mortgage. They don't want to lose their house. Number two, they pay their car. They don't want to pay their car. Number three, maybe they'll pay the loan. Number four, they pay credit card, etc. These are the people that pay all their bills. That's who the SoFi borrower is, and that's just what this Two Analyst and a lot of the financial media does not want to actually acknowledge is that SoFi is not Upstart and Affirm, and SoFi is not on the buy now pay. SoFi's customers are professionals, people with advanced degrees, people with extremely good careers, people that aren't going to destroy their credit. These are people with nice homes, nice rentals. These are people that need good credit for their lifestyle. And so when the loans go bad, then punish SoFi. But the loans aren't going to go bad because SoFi is holding those loans on their books, not because they can't sell them off, because they are the prime loans in terms of the personal unsecured loans. These are the best customers you can get. SoFi's holding them on the books because they're making a ton of money. That's why. SoFi wants to collect that interest. That's going to get SoFi to a net profit. And people are like, well, there's a profit margin built into their accounting from selling off the loans. I think they're making more than that margin holding the loans. And I think that's why they're doing it. I think they could sell off certainly some of the loans. I think they could have predicted that people would latch onto this as a reason to short, a reason to bash, a reason to cut. But they were going to find something anyway. It made absolutely no difference. But in this article, SoFi gets a bull. There's just a couple of main points. I invite you to read this for yourself. It's linked on Yahoo Finance, also on Investor Place. Investor Place has bulls and bears on SoFi, so if you want to get a number of different perspectives, you certainly can over on that website. But deposit inflow boosts the bull case for SoFi stock. CEO Anthony Noto recently pointed out the diversity of SoFi Technologies' business not being overly dependent on any one product or service. Noto emphasized that SoFi has products that can do well in high interest rate environment, yet the company also has other products that can perform well when interest rates are low. Furthermore, SoFi Technologies didn't take undue risk by overinvesting its depositors' funds in treasury bonds or cryptocurrency. And that's what I want you to remember too. SoFi has really done what's best for their customer, or tried to. SoFi could have gone out there and said, okay, here's a full option suite, go nuts. But they know they can read the statistics that say their customers are going to lose money on those options. They're going to buy a bunch of options. They're too stupid to sell options and collect premium, let time decay work for them. Retail always want to buy options, throw their premium away to market makers who are going to kill those options. And SoFi wants you to get your money right and make money. And I think they will add more options in the future. But SoFi also just didn't go nuts with the crypto. Yes, they had crypto on their site, but they had a select amount. They didn't have a lot of the shady ones. And SoFi is largely, they're not, a lot of their business is not crypto. It's a very, very tiny part. I think they're getting out of it altogether, which I favor. I think a couple of the larger cryptos have merit, but a lot of the smaller cryptos are just purely scams. And the SEC and they're cracking down on people with criminal charges, which they really should. But in any case, there's deposits are flowing into SoFi. SoFi has $2 million worth of FDIC insurance. The vast, vast majority of SoFi's members, I think it was like 95% of their depositors, they don't have over 2 million, so they're completely protected by FDIC insurance. So SoFi had a large inflow during the first quarter of 2023. Deposits grew by a record 2.7 billion, up 37% during the quarter to 10 billion. And I just saw SoFi cracked the 100 biggest banks in the country by I think the size of their balance sheet. In any case, SoFi is growing at a rapid rate of deposits when other people are fleeing these mid-size and regional banks. And why? Because SoFi does not have exposure to anything risky. SoFi has great numbers. Their reserve requirement numbers, their ratios, they're all way, way, way ahead of other banks in the industry. And where other banks are, 8%, SoFi is at 13, 14%. And it has come down slightly because they're lending out more money and they have more loans on their books, but their ratios are still far in excess better than the industry standard. So SoFi Technologies demonstrates top line growth and aims for profitability. Again, For those of us that know the ER very well, we know this. Believe it or not, SoFi just had its eighth consecutive quarter of record adjusted net revenue. That figure reached 247 million, up 43% year over year. Listen to that. 472 million in adjusted net revenue. Now, over time, you're going to start to take away a lot of these other items, and that adjusted net revenue is going to go to the bottom line. So it is very important that that is up 43% year over year. Yes, I'd like to see a net profit sooner than later, as I know we all would, but we will get there sooner than you think. And as also you guys know, SoFi has a goal of positive GAAP net income in the fourth quarter of 2023. Some critics might wonder whether this objective is achievable. It's an ambitious goal, but I'd say it's realistic. Just consider the trajectory of SoFi Technologies' bottom line results over time. First quarter 2022, SoFi had a net loss 110 million. For the same quarter 2023, the company narrowed its net loss to 34 million. So achieving break even or better this year isn't out of the question. It's not out of the question. It's very, very likely. And if student loans come back, as we expect some kind of decision from the Supreme Court within the next couple of months, and then student loans resuming in either Q3 or at the worst case Q4, we should see SoFi getting that refi business back up and running if that was the last interest rate hike. And hopefully rates come down over the next couple of years. You'll see that mortgage business resuming as well. And as you know, SoFi just acquired a mortgage lender. So you're going to see additional cost savings from Galileo. You're going to see the Technesis Galileo integration really should bear some fruit on that side and should reduce expenses on the technology side, increasing the profit that business is contributing to SoFi's bottom line. I think Noto could dial up a profit next quarter if he actually wanted to. I don't think that's his strategy. I think he wants to go slow, accumulate a lot of shares personally, be able to give out some of that stock based compensation, build the team he wants. I think Noto is really has an extremely long-term mindset, or he's looking for a big number for a buyout. I think he'd take either path, but I think this is his kind of his baby. I think he really believes in it. I think he's got a huge amount of his own personal net worth invested in it. And that gives me a lot of confidence as an investor. Um, there's so many more things I could go on and on about the SoFi stock all day long. I've already blabbered on for about a half hour of your very, very precious time, and I appreciate you watching with me. I would love for you to hit me up down in the comments and let me know, what do you think about the SoFi stock, this reaction to earnings? We had this massive short attack, stock brought all the way down in the fours. We thought it was going to make a little bit of a comeback, came back up to around 550, and then all the way back down to 5. Now, what's going on with the short interest? I could tell you just very, very briefly that the shorts have not let go of the stock, have in fact increased their short against the stock. From 3 months ago, the last ER, the utilization has gone from 50% to 95%. Shares on loan have gone from 103 million to 200 million. The percentage of the free float on loan has gone from 13 to 25, and the short interest of the free float has gone from 8 to 14. Now, if we look in the last 2 weeks since earnings, you will see that the estimated short interest has actually gone from 12 to 14. The free float on loan 18 to 25. Shares on loan 144 million to 200 million. Days to cover from 4 to 6. And the utilization has gone from 68% to 95% just in the last 2 weeks. So there is a big short on the stock. Just on Friday, 4.4 million shares were returned, over 8 million were borrowed, so a net change, almost 4 million additional shares sold short. If you know what this is, if you actually know what happened with the earnings, the earnings were very, very good, especially considering the conditions. The earnings were excellent. There were some weaknesses. I would like to see more growth, but a beat is a beat, and there's no reason the stock should have been sold off as hard as it was, because it wasn't really a sell-off. It was a short attack. Market makers had pre planned this. Again, I find the downgrade very, very suspicious from an analyst with an absolute garbage track record. But the media just amplified and amplified and amplified. Wedbush makes a cut. Wedbush makes a cut. And it's like the guy's logic was extremely thin. It didn't really make any sense. I feel like if the SEC and law enforcement were doing their jobs and enforcing the law, we would get on these type of people who sort of coordinate these things. But that happens between the media and analysts, and it's up to you what you do with it. If you play their game and follow their script and dump on command down at the very bottom, then you're always going to lose. You're always going to lose money. But if you hold on to your shares and average down on a very good company when they create these opportunities, I think you'll do very well. However, I have my ups and downs like everyone else, and this is not financial advice. I would recommend you speak with a licensed financial advisor or a trusted member of the clergy. In any case, my name is DannyDealz. This is Un Poco Mas. On behalf of Hurricane Lopez, I would like to thank you for watching the program. Happy Mother's Day to all you mothers out there. You guys have a great night, and we'll see what happens this week with the Sofi stock, and I will talk at you real soon. Y'all come back now. You heard?